Good morning, everybody. Welcome to the Morning Blast. It is Monday, the 30th of March. I hope everyone's had a great weekend. You join myself, Ryan, and of course, Michael Brown for a very, very, very candid takedown on markets. Think of it as more bar side than fireside. With that in mind, we do not apologise for any foul language or rants or tangents that we go during our journey through the podcast. Obviously, nothing on this is trading or investment advice. Do your own due diligence, etc., etc. Michael, how are you? Good weekend, I trust.
Yes, indeed. Very good morning to you, Ryan. Good morning, everyone. Not too bad at all. Thank you very much. Weekend was relatively stress-free, given that the Arsenal weren't playing. But back to the grindstone we go this morning and into, well, I suppose week 5 now of conflict in the Middle East continuing to dominate the narrative.
What is it, day 30 of the Thunderdome? Something.
I believe it is. Yes, that's right.
There you go. Well, before we crack on and give a bit of an update on that, and obviously as it's Monday, we do have a kind of a look back over the entire weekend and a look forward over the entire week. Let's get our latest update.
Well, I'm not sure look forward is the best turn of phrase at this point.
Quite. But well, we'll see. You know, optimism and all that. Yeah, what is it? Who was it? Zach, our dear friend Zach Powell this morning, that Morgs or Mike Wilson over at Morgs is saying that, you know, this is looking like the beginning of the end of the correction in stocks. So perhaps, you know, we are.
I didn't want to rain on Zach's parade, but Mike Wilson did say that last week as well.
And probably for wasn't he bearish all the way up as well?
No, that was the fella at JP Morgan who is now still bearish, but on Twitter because they got fed up with him.
Of course it was. That's it. Right. Anyway, speaking of someone that only looks at the charts and the technicals and doesn't have any bias, let's go over to our dear friend Clive Lambert over at Futures Techs. Fairly, as Clive noted, fairly muted start so far this week, but then again, it is only Monday morning. Month end is looming, and just a caveat there from myself and Michael: if in doubt, just blame anything on month end flows. You sound like a professional. That's what we do.
You think we're joking, but we're actually not.
Yeah, no, if in doubt, month end flows. Also, if you hear anyone else say it on television, such as CNBC or Bloomberg, you have to have a drink.
And also, you know that they are bullshitting.
Yes, quite. S&P hit our first target of 63.63 overnight after seeing red on Friday and opening on the back foot. Some buyers have stepped in since, though, are back in Friday's range as Clive went to print. 64.67 is the Marabouzi resistance, all on that one. Nasdaq now trading at levels last seen last September after seeing weakness back to 22.093 overnight, where we found some responsive buyers. DAX futures, that sold off to 22.247 on Friday and 22.124 overnight, but it's rallied from the early low. I think that seems to be kind of the trend all round on equities at the moment. It's kind of been a bit of a bid so far this morning. FTSE futures are starting to stay below 10,000. Above that, 10,152 is the Fibonacci level that we're watching right now. Bund futures, German government bonds futures bid this morning, but still bearish. T-Notes posted a doji on Friday and is bid overnight, so some signs of life down here in that one. The US dollar saw gains against most of its peers on Friday. Cable saw weakness back to 132.33 overnight, so iron a recent low at 132.18. Gold, the yellow metal, and silver now trying to recover. We want to see gold back above 4,600 to get excited about further upside. 75.00 or 75, the big figure, however you want to describe that one, is the big resistance higher up in silver. Elsewhere in metal space, aluminium gapped up today after news of the attacks on the smelter in UAE.
Whoa, Clive. That's fundamental analysis. Are you all right?
I do love it when Clive kind of, you know, throws technicals to the wall and just brings out some macro news. You know? Well, it's good. I like it. It shows that he's got one eye on what's actually moving markets.
And well, what's more amazing is he managed to do that without asking us what happened.
Well, I did wonder if he might have texted you or WhatsApped you not in our group.
No, I can confirm he has not.
And I can confirm he didn't do that to me either. So
he's a changed man.
Well, he's obviously got someone else to ask, isn't he?
Yeah, he's got another source.
He's texting someone else now because of all the grief we give him. But anyway, yes, this news on the UAE smelter is sending aluminium higher. 3,400 and 3,303 are supports for now. 3,546 and 50 cents is the recent high. Brent crude bulls had a good day on Friday with gains seen to $106.95. then $109.46 overnight. We've got higher above. We've got 112.12 and 119.50 are the key resistance and targets on further gains for that one. TTF, European natural gas, gapped up on Friday but didn't hold the gap after an early failure at 56.90. This is still shy of resistance at 57.19 and 58.24 as when we've gone to the podcast, which is something for the bears to cheer on, well, at least to be on the side of them, and also, I guess, many policymakers across Europe. EU carbon markets, finally from Clive, posted another solid doji. So it's a bit of a lost for now, or it's a bit lost for now. 74.74 to 74.80 is a retrace target where we're gunning for right now in the carbon markets. Thank you very much, Clive.
Very good. Thank you, Ryan. Thank you, Clive. Yeah, we'll do kind of Middle East developments, a bit of a rundown on some of the latest headlines in a second. I did just want to make a bit of a broader comment this morning about some of the price action we saw on Friday and actually today. I think the first thing to bear in mind, I hate it, but I know people are going to latch onto it regardless. The Nasdaq 100 closed in a quote-unquote technical correction on Friday, so down 10% from the record highs that we set last year. As frequent listeners will know, both Ryan and I are not exactly huge fans of those arbitrary definitions.
Yes.
I don't think they tell you particularly much, but it's on all the front pages, so I thought I would mention it. Probably more importantly than that is the S&P, which notched a fifth straight losing week, so basically down for every week during the conflict thus far. The other comment I was going to make, though, is that I think Friday's action, and to an extent what we've seen this morning, is interesting because effectively since the conflict in the Middle East began at the start of the month, we've had a market where basically you can describe it as all correlations are at one. And what I mean by that is if crude goes higher, we see equities come lower, we see bonds sell off, and we see gold selling off as well. And if crude reverses course, the opposite tends to happen. That wasn't necessarily the case on Friday because we did see crude benchmarks continuing to gain ground. Brent and WTI were up by about 5% apiece into the weekend. And yes, equities did sell off in fairly chunky fashion, but gold remembered that it was meant to be a safe haven, as Clive alluded to in his rundown. And we also saw some notable gains across the Treasury curve as well, which are actually extending this morning, particularly at the long end. And the reason why I bring this up is because one of the things that we've kind of been talking about throughout this conflict is higher energy prices. Yes, they are going to cause higher inflation in the immediate term, but they're also going to have a significant detrimental impact on demand, and they're going to pose significant headwinds to economic growth. And I'm just wondering, I think it's probably too early to call this definitively just yet, but just the first sort of tentative signs might be starting to emerge that the market is slowly but surely shifting from what has been a very myopic focus on inflation to actually a bit of a broader view, which is saying, yes, we are going to have inflation risks in the near term, but this is not good for growth either. And it would be very, very interesting to see whether that dynamic is indeed starting to change, particularly, and we'll get onto this later, but we've got a busy week of activity data coming up this week, including ISM, PMIs, and of course the jobs report on Friday. So potentially just something worth keeping an eye on in terms of how things might be changing.
Yeah. I tell you what, as you've done that fantastic little back-looking overview and such, so let me give a quick opening salvo where we lie right now.
Go on,
and you can take it from there. So obviously, as we said at the start of the show, it's day 30 of the Thunderdome, or Operation Epic Fury, or whatever it's called, basically Iran war. As we sit right now, Pakistan are being understood to be brokering talks. Trump's saying that Tehran has agreed to, quote, most of his 15-point demand, and claims that Iran has sent oil as a goodwill gesture through the strait. People that seem to be on the ground and know about this kind of are saying that, hang on a second, that's just their own boats to Pakistan so they can generate more money. But we'll let Trump have his moment. Meanwhile, strikes continue on both sides. The 10-day pause on hitting Iranian energy sites expires on April the 6th, although we have heard reports that Israel hit a power station over the weekend. I'm not sure if that was confirmed or not. Houthis have re-entered the conflict, firing on Israel for the first time since the war ended with them. And if you remember, there's a lot mini little skirmishes going on. Market staring down a week that ends with NFP on Good Friday when the US stocks are closed. Happy days. And the S&P is on track for its worst quarter in years. So yeah, take it away, Michael Brown.
Well, yeah, quite. It's
Where do you want to start?
There's a lot going on, clearly. I think probably the few major things that I would pick out in terms of over the weekend that have happened. The first would be the Houthis saying that they are now getting involved with the conflict. The reason why this is important is because, well, Saudi in particular are now exporting somewhere between 5 and 7 million barrels per day through Yanbu, which sounds Chinese, but it's actually a Saudi port on the Red Sea. If the Houthis start to get involved, and I will stress actually that thus far the Houthis have not said anything about attacking tankers. They are only firing missiles at Israel at this moment in time. It's not a massive stretch to assume that could change. That is going to be another big risk for the energy market to take into account. It's not quite a direct parallel with what's going on in Hormuz, because you can just pull up a map. There are two ways. There are two ways out of the Red Sea. But if you're trying to get crude to Asia, going through Suez and then around the entirety of Africa to get to India or China is going to take a hell of a lot longer than going through the Bab el-Mandeb Strait. So again, another potential risk that the market is going to have to discount. Not a particularly great sign by any stretch of the imagination. The other one is these strikes that have been conducted on steel plants in Iran. Obviously, aluminium bid up this morning, as Clive alluded to, on the back of that retaliatory action. Again, it just speaks to how there's a risk that we don't seem to be materially de-escalating at this point. And if anything, it's becoming a bit of a kind of tit for tat conflict where, Israel and the US will hit one type of infrastructure or target in Iran, and they will attempt to fire back at similar types of targets in the entire Gulf region. So again, trying to drag other actors and other countries into the conflict a little bit. I think the other sort of broader point that's interesting is, and we've kind of all forgotten about it, we had this latest taco moment on Thursday night where Trump was saying, a 10-day extension to these proposed strikes on Iranian power infrastructure. The fact that the market just kind of, I think it was about half an hour for the market to react to that and then fade all of the reaction, whether it be downside in crude, upside in equities. And I think, again, that speaks to the fact that the market actually just wants to see some sort of concrete action, some sort of firm steps now. I think we're kind of at the point where we're getting a little bit, just in terms of a general, we are getting a little bit tired and a little bit fatigued of the rhetoric. Yes, exactly. The rhetoric we're past the point of that now, and we actually need to see things happening in order to elicit that reaction. And that's actually kind of what we were speaking about previously in terms of bad news, for want of a better word. The magnitude of that bad news needs to be greater now than 5 weeks ago to elicit the same reaction. It's the same in terms of good news as well. If you go through and run a search for how many times Trump has said, that negotiations are going well, or we're talking with the Iranians, he's probably said that 10, 20 times now since the conflict began. And yes, that's different to what we were hearing at the start of things, but because we've heard it 10, 20 times, we just become desensitized to it.
Yeah, no, exactly that. And I do think, Trump is now looking just quite, figuratively looking down the barrel of a gun here, because this is dragging on much longer than was originally mooted. And the latest opinion polls in the US have Trump, all sides opinions of Trump are waning. Obviously the Democratic voters obviously already hated him, but he is sitting at the worst levels in terms of popularity that I think of his entire presidency so far. Markets, again, as we've said at the start of the show, 5 weeks on the spin, being red, worst quarter in years. We do know that he's a massive fan of being popular, or trying to be popular, and a massive fan of stocks. At what point do we start seeing just the stock market weighing on his decisions? Because, going into the final days of the quarter, I wouldn't be a bit surprised if we do see some last minute pumping from Trump trying to get this up. And also, at what point does he kind of just say, do you know what, fuck it, we're just going to have to walk away here now and just try and let the Middle East sort itself out?
Yeah, well, again, I think this, the market perspective I completely agree with. And I think Trump, and actually we said on Friday morning, we wouldn't be entirely surprised if Trump didn't come out and say something during Friday's session. And actually he didn't. And I did find that surprising.
Yeah.
But I think it again comes back to that point where the market wants more than a true social post at this point. Unless that true social post says, ceasefire has been agreed, which, clearly we all actually want to happen, but it's unlikely at this point, it would seem.
Well, the weird thing was, again, we need to remember that, Trump does just make stuff up to make himself look like he's come out of this on top. For instance, Trump arguing that, telling the world that Iran has basically agreed to his 5-point demand list when the Iranians themselves have said absolutely not. So there is a situation, and we have seen this. This isn't like going to be a precedent. We've seen this many times before, where Trump basically makes stuff up to make himself look like he's walking away from this as a winner, when basically all he's doing is walking away, and he's just letting everything else be sorted out, because knowing that something else will happen in a little while, in 2 weeks' time, that will make us forget about this.
Yeah, exactly that. And again, there are, it's going under the radar, but there is, chatter about what's going on in Cuba.
Yeah.
Does Trump turn his attention there? I don't know. There's also an argument where, as you say, it could get to a stage where Trump sort of goes, and this comes back to the aims of the conflict ultimately, which are very, very loose, if we're being completely honest. Destroy missile capability. Well, you can realistically claim that if you've dropped one bomb or a million bombs. Let's be completely honest. So, there is a world in which Trump can just claim victory and come home. There's probably another world in which Trump goes, well, actually, do you know what? Fuck it. We're so far in now. We got nothing to lose. Let's just send a load of troops in. Now, I'm not saying either of those is my base case. I'm not a military strategist. I've got no idea how easy or difficult either of those would be. But the point is that, the range of possibilities here
and this
is still so wide.
Well, quite, because this is it. And this is, again, it's that complete range of possibilities, which means, markets are incredibly uncertain at the moment. We've got people trying to price in cuts and price in hikes in terms of like the major central banks. It's all getting a bit weird out there. But I think it's good that you mentioned Cuba, because we are starting to see chatter on Cuba kind of increase, and it has been really it was very much like little whispers kind of growing when Maduro was arrested or kidnapped, whatever you want to call it. That feels like it was a decade ago. It was this year. But I think I did read a good article over the weekend that was saying, do you know what, if Trump did want an out and to point everyone's heads at somewhere else, doing something with Cuba or doing something on Cuba would be a great kind of diversion, because it is very close to home, and the US press will be picking up on that much more, specifically because of the number of like Cuban immigrants and whatnot, and people like tied to Cuba and whatnot. So it will definitely take the heat off of him domestically of what's going on in the Middle East. And it does, would you be a bit surprised if Trump just turned around and said, oh, do you know what, I've had me fun, right, I'll leave you guys to try and tidy it up and walk away from the Middle East and just leave the Arab nations to try and sort themselves out? I mean, you wouldn't be surprised if he did it.
Not at all. And, I think this is where you've got to look at what Trump's been saying. How many times has he said in recent days and weeks, we don't need the Strait of Hormuz. We don't rely on it. There is probably a world, again, you can put your own probabilities on this, but there is a world where Trump goes, we don't need the Strait of Hormuz, as he said before, so we're not going to bother trying to reopen it. You guys rely on it. You can deal with that.
But then if that did happen, then I'm trying to think, obviously trying to bring this back to trading. If that did happen, one of the key things for Iran is for America to fuck off. Obviously that's a technical geopolitical term there. And if that did happen, even though, immediately the strait isn't going to reopen, and obviously Israel is still getting involved and, all of this stuff. But I think if we did see something along those lines of Trump just saying, do you know what, we've done all we needed to do, we'll let the guys in the Middle East work out how to reopen the strait, but we're going back to our side of the pond, I do think you'll see a fantastic risk-on rally.
Absolutely.
I think it'll be like a rip your eyes out job, to be very honest with you.
Yeah. I mean, I think the kind of playbook for de-escalation, whatever form that eventually takes, I think the playbook is probably something along the lines of Liberation Day-esque rally, maybe not to the same magnitude, but that sort of, violent move higher, probably, extend on that for a little bit. then the market will slowly but surely start to ask questions around, okay, the conflict is over. Is Hormuz open? Okay, the conflict is over. Hormuz is open, but how much energy disruption has to work its way through the pipeline? It will very much be the second that headline crosses, which says, conflict over, ceasefire agreed, whatever, whenever that headline arrives, it will be a case of, buy risk first, ask questions later. But we will have to ask those questions at some point in the future.
Yeah, no, absolutely that, mate. Absolutely that. Apart from all of this and second guessing what Trump's going to tweet next from the toilet, which is basically what we're doing, what else have we got to look forward to this week?
Yeah, indeed. Well, first things first, do bear in mind, of course, that here in Europe, we have put our clocks forward an hour over the weekend. So the gap between London and New York is restored to its normal 5 hours. So don't get caught out, expecting the market to close at 8 p.m. here in London or anything stupid like that. As for other bits and bobs, as we move through the week ahead, it is a pretty light docket to start this week. We do get German inflation numbers at lunchtime, obviously expecting quite a big uptick in CPI. To 2.7% in March, up from the 1.9% we saw in February. That is obviously being driven entirely by energy prices. The other thing to bear in mind today is we are due to hear from Fed Chair Powell. He is speaking. It's a bit of an odd one, actually. Every year he gives, I think it's at Harvard, a sort of economics lecture, Q&A, basically ask the Fed Chair and learn some economics from him. He might make some comments on the outlook. I don't think he's going to go much further than he did in the press conference a few weeks ago, saying that, the impact is highly uncertain, et cetera, but do keep an eye on that nonetheless. As for the remainder of the week into tomorrow, we've got inflation figures from the Eurozone. Again, expecting quite a big rise in headline inflation, up to 2.6% from a prior 1.9%. Markets have pared their bets on ECB tightening a bit. The April meeting is now priced at just 50% for a hike. That had been up at sort of 80, 90% a week or so ago. This was largely driven by comments that we had late on Friday from exec board member Schnabel. She is typically one of the more hawkish members on the executive board. She was saying that the ECB need to be agile and vigilant, but she also said that there is no need to rush, which resulted in participants pairing those hawkish bets a little bit. Also on Tuesday, we get a handful of US releases, including the latest job openings and consumer confidence figures. Into Wednesday, it is manufacturing PMI day pretty much everywhere you look. We also get retail sales from the States, unemployment data from the Eurozone, and Ryan's favourite numbers in the world, the ADP employment report.
Well, tied with Tokyo CPI.
Oh, well, we get that overnight today. So, it's a good week for you, isn't it?
It's a fantastic week to be me.
I'm not sure that's ever the case, to be honest, but there we are. Into Thursday, there's not really a lot going on. We get jobless claims out of the States, nothing else. And then Friday, it is Good Friday, first and foremost. So cash equity markets are going to be closed pretty much everywhere in the Western world. If you're trading products on the CME, then go and spend an hour trying to work out their holiday calendar. However, despite it being Easter, the geniuses over at the Bureau of Labor Statistics have decided that they will, regardless, be releasing the March US labor market report. Headline payrolls seen having risen by 60,000. Of course, they fell by 92,000 in February. Unemployment, meanwhile, that's set to hold steady at 4.4%. We will probably cover this a bit more on Thursday, given that, of course, we won't be doing a recording on Friday. However, I will just say now that because it's Good Friday, because the vast majority of market participants will not be at their desks, if we were to get a payrolls print that is massively out of consensus, then there is the risk that we see an outsized market reaction because conditions are going to be very, very thin indeed, owing to the bank holiday.
My opinion on this is that I wouldn't even be looking to touch with a barred pole, no matter what the data comes out.
Nor would I.
I would be looking to just sit in the beer garden on Good Friday, enjoy your weekend, and then come back Monday and try and, like, Monday morning, like when the dust is settled somewhat, see what people have like dug out of it, where they've dug through the details of the report, and hold tight for US Open.
I fully agree on that one, but you can bet your bottom dollar that someone somewhere is going to trade it. The other thing, of course, kind of goes without saying at this point, but geopolitical events are going to remain very, very much in focus as we move through the week, whether it be sources stories out of the Middle East, whether it be Trump Truth Social posts, whatever. The market is going to remain heavily focused on those developments as well.
Indeed they are. Indeed they are. Michael, absolute pleasure as always, my dear friend. Listeners, we truly, truly hope that you had a great weekend and you have a profitable week going forward. Whatever you do, keep it tight, stay safe. And yeah, we'll